Welcome back to our discussion on accounting equation and the financial statements. In this session, our focus shifts from accounting equation to the financial statements, and later on from the business decisions to financial statements. We'll go back to the same question that we have done. As I mentioned in the previous discussion, we have seen transactions without expenses and accounting equations. We have seen transactions with expenses and accounting equation. We have seen expenses but not paid and accounting equation. We have seen depreciation and accounting equation. Then we saw dividend and accounting equation. So that means any business transaction can be captured on accounting equation. We also saw that the balance sheet is the accounting equation on a particular date. So if you put all the entire accounting equation at a time, if you observe the profit on the accounting equation and the cash on the accounting equation, they keep on changing. Two important items which keep on changing are the cash and the profit. So why is this cash and the profit changing? So to understand that, they say that along with the balance sheet you have to prepare an income statement which will show the profit and a cash flow statement which will show all the transactions relating to the cash. So let me show you, without taking you to transaction by transaction. I say that if these transactions are there, they will appear in the accounting equation, and the last accounting equation is the balance sheet, right? Is the balance sheet that we saw. But how did you get this profit? Unless you go through each and every transaction, you will not be able to understand how did you get that profit. So income statement which shows incomes minus expenses is a profit. So this 30,500 will be clearly visible. How did you get that? In the same way, cash in hand 271,000. How did you arrive that? It's possible only by seeing individual items, or if you prepare a cash flow statement. That means the business transactions can be converted to accounting equation, or the business transaction can be converted into financial statement. But the principle behind this conversion is that generally accepted accounting principle. Let me take you to this process of converting the business decisions directly into the financial statement without the accounting equation in this session. So these are the transactions: balance sheet, income statement, and cash flow statement. I'm not doing the accounting equation in now. As we mentioned in the past, balance sheet will show the sources and the corresponding assets. Income statement will show incomes and expenses. The cash flow statement will show the receipts and payment. So the moment you see a transaction, you first ask whether it is a source, whether it is an asset, whether it is an income, whether it is an expense, whether it is a receipt, or whether it is a payment. Okay, that's important to ask. That's something which should happen at the back of your mind when you see the transaction. So started business with cash, you are receiving 100, so therefore I'm receiving 100. I show that as a receipt. But why did you receive that 100? Is it an income? Answer is no. It's capital. So therefore, capital will be shown on the balance sheet. Similarly, I'm availing loan. So loan is a receipt. I'm receiving loan 200, and loan is a source, definitely not an income. I have to repay that money. I'm purchasing goods for cash. That means on this date I'm having an asset of 120, and for that I paid money 120, so there is a payment. So goods purchase is a payment and an asset. And when I'm purchasing a plant for cash, once again I'm making a payment for plant, and plant is an asset. Okay, just to show once again that you can see that. Okay, so maybe I'll go back. So plant, how much is 35? Okay, and then you're selling the goods for 200. So this is the first time we get sales, which is an income. And whenever there is a sale, you have to ask whether it's for cash or credit. It is for cash. So there is a receipt to that extent, and that is an income as well as a receipt. But whenever there is a sale, there has to be a corresponding cost, which is called cost of goods sold. We are selling the entire goods, so cost of goods sold is 120. When I'm selling the entire goods, I'm not going to have the stock anymore on my balance sheet, so stock becomes 0. So let us see the stock to get a clarity that where was the stock. There was a stock of 120, and we sold the goods for 120, entire goods for 200, so the stock is not there anymore on the balance sheet. Then go to the next transaction. I'm paying interest. Interest is an expense, so I show the interest as a payment, and interest is an expense, so I show the interest. So interest, if I show once again to your formula, so interest is an expense, and interest in this case I paid 2. So therefore there is no outstanding or interest, or there is no liability on interest to be shown. Now if you see here, salary due but not paid. So I'm not paying salary, 0. But salary is an expense because of the accrual concept, so I have to show salary. But interesting, if you see, if you have not paid salary but it is an expense, so there is a need to show salary as a liability. So let me show you and explain that once again. That salary is an expense but not paid, so liability. An expense not paid is a liability. But if you pay it, then in that case it is an outflow of cash. Depreciation 4, so I'm paying depreciation, but it's an expense, but there is no payment for depreciation. But depreciation, to that effect, the value of the plant will reduce. Okay, so all the transactions are done. Dividend can be discussed only after we calculate the profit. So once you have shown the items on the financial statement, let us find the profit. Profit is equal to incomes minus the expenses, 59. And in the same way, find all the receipts. So total receipts is 500, and total payment without dividend is 157. But since you have profit and they mention that you're paying a dividend, so I'm going to show dividend as a payment. Dividend is a distribution of profit, so therefore I'm not going to show it as an income. I'll explain that bit later. So this is the profit and this is the dividend payment. Now what will happen to this profit and the dividend? You made a profit of 59, you made a profit of, or earned a profit of 59, and you distributed 25, so there is a retained profit of 39. And you see the cash in hand, all transactions done, so cash in hand is equal to 318. So my balance sheet tallies, which was also the case in the previous question or the previous discussion. We saw that balance sheet was 349, 349. But here we don't know how did the profit how did we calculate the profit, how did we get the cash in hand. So therefore the income statement, balance sheet, cash flow together shows the financial position much better way. So it is always better to prepare the income statement, cash flow statement, and balance sheet together. And this is what we'll keep on doing now. We will not do the transactions to the accounting equation. We'll keep on converting the transactions into the balance sheet and income statement. Some learning, you can see that all receipts are not incomes. You can see that we have receipts so much, but there's only one of them is income. In the same manner, all payments, okay, are not expenses. You see that there are so many payments you have, but expenses are this. So all receipts are not payments, all receipts are not incomes, and all payments are not expenses. Besides that, we saw that interest is an expense, whereas the dividend is not an expense. Then what is this dividend? Dividend is distribution of profit. So let me summarize it now. So whenever you see the transactions, understand the items as assets or incomes or sources or expenses or the payments, and then understand the effect of the financial statements, keeping in mind the principles of accounting or GAAP. So in this case, all the transactions are converted into the balance sheet and income statement, cash flow statement. So that means every business decision, as I mentioned previously, will have these financial items, and these financial items will appear on the financial statement. Now let me summarize and take you through right from the first one. We started with this accounting equation. Then we said that if expenses will be there, what will happen? And expenses have to be recorded because of the accrual concept. Then we say that outstanding expenses, if it is there, what is to be done? Outstanding expense will appear even if you have not paid because of accrual concept. And depreciation, though it is a non-cash item, I have to show here not because of accrual concept but because of the matching concept, the profit to be determined by comparing the income with the corresponding expenses. Dividend, if there is a dividend, if the profit is there, I can distribute the dividend. So the dividend is a distribution of profit and a cash outflow. Then I mentioned that all these financial accounting equation is actually can be shown in the financial statements. That means the financial statements are actually the manifestation of the accounting equation. But you don't see accounting equation everywhere in the annual report. What you see is the financial statement. So it is better to understand the transactions and effect on the financial statement. While doing that, we remember the gap and also some general understandings which is emerged here, which will keep on developing as we move along, is all receipts are not income, all payments are not expenses, interest is an expense, dividend is not an expense, but dividend is a distribution of profit. Thank you very much.